Welcome to Trading Lounge and the Asian report for the 8th of April, starting with the ASX here on the daily chart. We know that the move up through here is likely to be corrective, and in terms of confirming that, a move from this current high here back to 5,000 would give us overlapping wave structures, so that would create the bearish point at that stage. We know that I think it was last week we had a look at A and Z here as a chart here, and this is pretty much the banking sector for Australia here, where we can look at this as wave 3 over here, an A wave down here, an A and a B and a C here for the B wave here, and that means that we've taken out the top here. It means that this correction as an A and a B and a C here is an expanded flat correction. So an expanded flat correction, when it takes the top out here in 3 waves here, the distance above that takes it out here will be pretty much the distance that takes it out below this wave A low here. So in terms of counting this, we can see, well, I can see that this is quite a clear 5-wave structure here. I can see that this is also 5 waves here as well. So an A and a B and a C wave for wave 2. And we've got wave 3, 4 and 5 to play out through here. This wave 1 here over to wave 2, I have to say wave 2 is complicated, and the reason I say that wave 2 is complicated is because the time that it took in relationship to the wave 1 here. So it's taken twice or 3 times as long at least, and being complicated here means that wave 4 will be rather simple over here. So I don't think that we're at this wave 3 yet. I think between 2 and 3 here, I think that we've only got 1 and 2 and 3 here, and we'll have wave 4 now and wave 5 down for wave 3 here, and then wave 4 and then wave 5. I don't think wave 4 is going to be as long as all of this here. I mean, that's quite a few, it's quite a lot. You can work that out yourself, but it would be, at least sort of half the length of all of this. So, if this was, what's that there, if that's like 2 years, 4 years here, then we've still got quite a long time as a bear market for the banks here. And I'm reasonably confident with this count here because just the way that it's structured, I can't see it being anything else here. It could be a triangle pattern for that matter, but I'll have to go back and check the A wave here to see if it was 5 waves or 3 waves here. It looks like 5 waves, so it's probably doubtful that it's a triangle. A triangle would be an A and a B and a C wave here, a D wave and an E wave over here. Just taking that on board here, then if I look at the banking sector, because Australia's made up of either banks or mining, so we can see that the move down through here, this is a weekly chart here, and the reason I'm pointing this out for is just the volume, because a trend needs increasing volume to be a trend. So in this move down through here, then we can see that the volume's been increasing, but these moves up through here, we can see that the volume on each bar here has been getting less and less and less. Of course, this week's not finished, but it's still got, it's got a long way to catch up in this case. So we are seeing the market move up, and we're seeing the volume diminish here. That's what you call divergence, and that's what you would see in RSI indicators and, all those sorts of things that people use. But really, it's just the price and the volume, as most of the other 3,000 indicators are. So we could say to ourselves that the banking sector is neutral at this stage, unless it finds the support on 5,000, and unless we see increased volume for this market to move up. So being neutral means that it's not just bearish yet, because it could push a little bit higher. We could turn neutral. We could turn neutral here if, say, this is the weekly chart here. If, say, this low here was breached, It still may be a more complicated correction, but it would be a sign of weakness taking those lows out, because that's a bit significant, whatever that level that is in there, because we've got the close here, the open here, the close here, the low here. So there is a bit of significance in there, so a breach of that. And then also looking to add to the position once this low here is broken as well. We don't trade the banking sector, the XXJ, but we can certainly trade the banks in this manner. So using a weekly chart and using the weekly robo for that. So the robo method is just simply shorting the low here and keeping the stop above there. So you need to work out what your risk is within that, because you need to stay in your risk parameters for this. And if this market was going to drop, well, then the banking sector would go from the 5,000 down to the 4,000 at least, to that particular point there. And we could probably see ANZ, drop from 15 down to $10 or something like that. Anyway, I just thought I would bring that across and show that, because we are seeing weakness here. So maybe I'm thinking that I've got this correction a little bit wrong here, and we need to put the A wave there, the B wave here, and the C wave here for this. So let's just go in and have a little look at this here on the 4-hour chart to start with. So as I just noted then, I've just shifted the ABC around, because we had this sitting over here and the B wave here, and I was looking at this as 1 up here and back for 2 here, possible, and we'll see, but I think looking at the situation, I think this is a better fit here, and we just won't reach that top up there. That said though, you always keep an open mind, and look for the evidence. So if we see a move above this level here, then that will be a long trade from that point. So if it stays on this trend line here and stays on the current lows here and moves up through here, then we can go long at that point. We could also get a better long position too on in terms of the trading levels. We've got 5,000, which is a major level, and then we've got 1, 2, and 300 here. So if we get support on top of the 300 here, we can also go long at that point there as well. So just looking at this here. So this is what I think that we could have here in place already, let me just get all this into picture here. So I know I've got 5 waves up here, we've been through that, but an A wave here, a B wave here, a C wave here for the A wave, and then an A here, an A and a B and a C for the B wave, and down for the C wave here, which will need to go on that low in this case, and that B wave there, and that finishing at that particular point there. So I can't really go short just yet in this. This is the way we can look at it. If this top here that I just mentioned gets taken out and the market moves up from that point, which is likely as well, and moves up through here, then we can go long from that point. You can also go long a bit closer here on top of the 300 here with a nice support on that, okay? And because we can go long there, because that would make this an A and a B and a C wave here for this. And the short trade here, if you wanted to build in a position if the market was going to continue down from here, we need the number 2. This is where group 1 comes in really handy, because 100, 200 and 300. We know if we get a tested support on top of 300, we can go long, and that's what I've been looking for, but just haven't really got that retested support. This would be the first case of that being in play here. And secondly, if we're going to go short, we need the 200 as the retested resistance here. So we would need to look at that in terms of, if I can just draw it over here, market comes down here, likely to see a bounce, of course. There may even be 2 bounces, another smaller one within this space, whatever. But it's this one, the first low below the level here, that we are looking at in this case, and then the retest at that point, and then the short trade from that point there. So if I move that and grab that, copy that, and put that here, if that is the case, and just make it a small position, because we will also look to add copy this, put this down here. We'll also look to add in the same patterns at these levels here. So what I'll do here is I'll just put this as a thin line here, and this one here is a thin line here, and I'll leave that one as a thick line. We can build in from that particular point there. So that's what we'll do at this point. Now, the other interesting thing here, from this low here to this high here, if we count up as 5 waves here, then we can look for this as an A and a B and a C wave here, and then it's possible to look at this as wave 1 here and wave 2 in this case here, or even at a smaller degree of structure in terms of putting a green one here and a green one here, but it doesn't really matter. But you get the message that I'm saying. So look, overall, I'm thinking that all of this is a corrective rally. I can't prove that so far because the market hasn't dropped down and given us overlapping wave structures at this stage. So we're happy to go long, but we're also happy to go short as well. We just need to flow with the river, with the evidence, and that's all I can say, and that's all we need to do at this stage. But yeah, it is the banking sector here that. Looking at all of this structure here is showing the weakness here. So, even I think that we might look at putting some stock trades out for the banks. So we'll probably use entries on the weekly robo for some of these banks here. So we'll look forward to that. And moving on. So moving on to, I want to have a look at China first, because with China here, I was looking at this in two counts here. So I know that's frustrating as an A wave and a B wave and a C wave on this low here. Now I'd only have this as an ABC correction here, and then going into a bullish pattern here if we find, if we find support on top of 13,000. So yes, it's traded above the 13,000 to the 61.8% mark here, but that's not support, is it? So we could also look at this as down for 1 here, back for 2 here, down for 1 here, back for 2 here, and look to short this as well. But we don't have overlapping wave structures at this stage as well for this. So we would need to look at, I could probably get a better position, but we could probably short it at this stage here, and I'll just put that in here because it's sort of Hong Kong that we're looking at this stage to do that. So we would need that to stay above the previous low here. I know that's an impulse wave here. I don't know what that is here, something that's not finished or corrective, but it should be an A and a B and a C. But anyway, it doesn't really matter. But below that there, that will turn this into a bearish pattern here, and we can look to either short this market or short Hong Kong in that case as well. So moving over to Hong Kong. So with Hong Kong here, as I've mentioned many times, that a little bit unsure about all the count here. We're looking at it as an A and a B and a C wave here. If that's the case here, then we noted this as an A and a B and a C here. We noted this up as possibly wave 1 here and 2 here. And then we're looking for wave 3 coming into play here. I have to do my homework there. I was just assuming that was wave 3 that was put there yesterday. So the wave 4 here would be a 38.2% retracement level, or the wave 4 of 1 lesser degree here. So in this case here, we can look at this low here, and also the 38 point. So it's a pretty wide scenario there for that. Just clean this up here. I should just double check all of this here too, actually. But what I can say is that this here, this low here, we can put the stop there. We can move that up here if you haven't already taken profit. I'll put it just under here, because if that's the 38.2% retracement level up here, then then if this level here, the 23,700, became the retested resistance, then would have a top in play at that particular point. I need to take this into consideration too here with this. I mean, I have looked at this, and this is why I've put this over here. Don't need that. We'll see if you can work out if we got 5 waves in this section here. You'll have to break that down to a 15-minute chart or 100 ticks or 50 ticks or something. But this would be in line with the S&P 500, by the way. So that's okay in that regard. If this market comes down here as a little A wave, B wave, and C wave here that should finish in here and move up from that point, then you can move that stop up into this space here, and then this is where you'd be taking profit up here as well. Not sure what that line's doing there. It must be that old high here, but 500 here. The next level up here that you'll need to watch out for too is, of course, is the 800. Just put that in there, close enough. 24, 27, okay. So next market is India. So with India here, we're looking at pretty much the same scenario as well. An A wave here, a B wave, and a C wave moving up through here. We're looking for 5 waves in this sequence. I don't see 5 waves here so far for this. Probably need to use these ones over here actually. We should leave this here at 1 here, 2 here, 3 here, which is a bit short, but that's okay because that means that just wave 5 is going to be short, that's all. One, 2, 3, 4, 5 for 1 and 2 here, 3 here, 4 here, 5 here. So yeah, yeah. An A wave, a B wave, and we're right on the low of the C wave, so we should bounce up from that point. I mean, it can drop one more little bit there, but that's in a nutshell. So if it moves back down to the 8,500 here, then we've got a top in place. But otherwise, and these should be in green here, not this color. But I suppose I should put that in there too. I'm just a lazy Aussie. So yeah, they should be green, but that's sort of, I can't see how that can count. Yeah, no, that's fine, but this wave here looks shorter than this one. Maybe it's not. Sometimes it gets a bit, just because it takes longer, it can be a bit of an illusion, you know. Yeah, wave 1 is definitely longer, so that means that wave 5 is just going to be shorter. Just going to be here or something like that. So just be mindful of that. Alrighty. I'm just thinking, I mean, it could be more bullish than this as well, but I mean, like all the way up here for one here. And then instead of this being a third wave here, it could also be, copy this here, 1 and 2 in here, and then moving up further in that way. So, but we don't need to worry about that, because if we're going to go long 9,000, if that's going to be the case, we will see the arrival, the reaction, the first high above the level, and then we'll see an ABC pattern, and then we can go long from here anyway. So otherwise we'll just see this work lower from that point. Okay, and we'll look to short that. So that's where we are at the moment with that. Alrighty, thanks for tuning in. Cheers.